Welcome back, everyone. This week, we're diving into the U.S. stock market for the week of Monday, September 29th through Friday, October 3rd, 2025. And let me tell you, it was one for the history books, but probably not for the reasons you're thinking.
So you had these two completely opposite headlines, right? On one side, total chaos in Washington. We're talking a full government shutdown. And on the other, Wall Street was, well, throwing a massive party, pushing the S&P 500 to brand new all-time highs. It just doesn't make sense, does it? How is that even possible? Well, that's the big puzzle we're going to piece together today.
So if you had to boil the whole week down to one thing, what would it be? Well, the single biggest positive was, without a doubt, the market's unbelievable resilience. It was almost entirely powered by this euphoric belief in the AI revolution. But the flip side, the biggest negative, was this really dangerous disconnect, a huge gap opening up between that market optimism and the real-world chaos from the shutdown.
All right, so here's how we're going to break it all down. First, we'll look at the day-by-day contradictions. Then we'll get into that shutdown paradox and the frankly unstoppable AI train. We'll check out the big movers and shakers, lay out 3 possible paths forward for investors, and wrap it all up with the key risks you need to be watching.
Okay, let's jump right in. To really get a handle on this bizarre week, we've got to look at it day by day. This is where you can see those two opposing forces really going head-to-head.
So Monday kicked off with everyone biting their nails about the shutdown, but AI hopes kept things afloat. By Tuesday, things got wild. A huge deal between Meta and CoreWeave sent NVIDIA to a new record. And then Wednesday was the day. The government officially shuts down, we get this absolutely shocking private jobs report, and what does the S&P 500 do? It hits an all-time high. Just insane. The AI hype train kept rolling through Thursday with OpenAI's valuation just exploding. It wasn't until Friday, when Jeff Bezos himself chimed in, that the tech rally finally decided to take a breather.
Okay, so let's zoom in on that unbelievable Wednesday rally. I mean, seriously, how in the world did a government shutdown and terrible, terrible economic news actually push the market up? This is the absolute core of the paradox this week. So, on Wednesday, October 1st, it was official. The U.S. government shut down for the first time in 7 years. Now that means a lot of things. Non-essential services grind to a halt. But for Wall Street, here's the kicker. The release of crucial economic data like the official jobs report everyone waits for was just stopped, suspended indefinitely.
And, as if that wasn't bad enough, on the very same day, we got the ADP private payrolls report, and it was a total shocker. Look at this. Analysts were expecting a gain of around 50,000 jobs. Instead, the economy lost 32,000 private sector jobs. I mean, that is the worst number we've seen in more than 2 years.
So this really is the million-dollar question, isn't it? You've got the government literally closed for business, and the job market looks like it's about to fall off a cliff. So why on earth would stocks rally on a day like that?
And here is the wild answer. The bad news was so bad, it actually became good news for the market. It's twisted, I know, but investors looked at the shutdown, they saw those awful job numbers, and they all came to the same conclusion. The Federal Reserve would have absolutely no choice but to step in and save the day. The market almost instantly priced in a 99% chance of an interest rate cut in October. It was like pouring gasoline on a fire.
But look, that bad news is good news idea was only half the story. Because while all this chaos was unfolding in Washington, there was a much bigger, much more powerful narrative completely taking over Wall Street. And that was the AI gold rush.
And man, the AI momentum was just coming from everywhere. This wasn't just talk. You had OpenAI's valuation rocketing past $500 billion. We saw a monster $14.2 billion deal between Meta and the AI cloud company CoreWeave. Micron, the chipmaker, got these huge orders for its special high-bandwidth memory, which is the stuff you absolutely need for training AI. The excitement was so intense that big banks like Goldman and Bank of America started raising their targets for the entire stock market, all because of AI.
But right at the peak of all this euphoria, a pretty big voice of caution stepped in. The founder of Amazon, Jeff Bezos, came out and called it what he saw, an industrial bubble. Now, he did add that these kinds of bubbles often come right before a golden age, but the message was crystal clear. Hey everyone, the market is getting way ahead of itself here.
Okay, so let's get specific. How did these massive themes, this shutdown paradox, and the absolute mania around AI actually affect the individual stocks that people were buying and selling all week?
Well, NVIDIA and Micron are the perfect poster children for AI dominance, right? Both of them hit all-time highs. Then you have Eli Lilly, which surged, and that was a sign that maybe, just maybe, investors were starting to look for deals in other places, like healthcare. Tesla is a really fascinating one. They delivered a record number of cars, which sounds great, but the stock fell over 5%. Why? Because investors are getting nervous that future demand is slowing down. And then there's Applied Materials, which was a harsh reminder about geopolitics. The stock dropped when the company warned that new U.S. export rules for China were going to cost them a ton of money.
So you've got this incredibly confusing picture, right? AI excitement on one side, economic weakness and political chaos on the other. So how in the world are investors supposed to plan their next move? Let's break down 3 of the main strategies that are starting to emerge.
Okay, so path number 1 is for the true AI believers. Their rationale is that the AI revolution is this massive structural change that's just going to steamroll any short-term political noise. The strategy? Buy the big tech and chip stocks on any dip. Then you have the second camp, who are betting on a value rotation. They're saying, look, as the economy slows, all that money is going to flow out of the super expensive tech stocks and into cheaper sectors like healthcare or small-cap stocks. And finally, you've got the defensive crowd. They see a bubble, they think the shutdown's real pain hasn't even started yet, and for them, it's all about protecting their money. That means moving into traditional safe havens like gold.
All right, let's bring it all home. What's the final word here, and what are the 2 absolute biggest risks that investors are keeping a close eye on right now?
You know, this week really gave us a perfect definition for something we can call the Great Disconnect. It's this giant widening canyon between a financial market that's just euphoric, high on AI hype and the promise of cheap money from the Fed, and the real economy on the ground, where, people are losing their jobs and the government can't even keep the lights on. And that disconnect creates 2 massive risks for investors. First, what if the AI bubble just pops? If these companies' earnings can't justify these insane valuations, that painful reset that people like Jeff Bezos are warning about could become very real. And second, what if the Fed doesn't come to the rescue? The market has already baked in those rate cuts. If inflation stays stubbornly high and the Fed can't act, then that whole bad news is good news logic that drove the market up could reverse and violently.
And that leaves us all with the ultimate question, doesn't it? Is the market's wild optimism a sign that we're on the verge of a new, AI-driven golden age? Or is it just dangerously sticking its head in the sand, ignoring a pretty grim reality? The answer to that is going to decide everything.